and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this cloudy Friday. I hope you all had a profitable week. Today we are going to, as always, take a look at my positions, how I plan to adjust them for the following week in this case. And yeah, as always, before we do that, let's get the usual disclaimer out of the way. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Last but not least, all the tools that I'm using, so the charting software, broker, the strategy I'm following, and so on, everything is linked down in the description below. And the one thing I really recommend, if you haven't done it yet, is to check out the Elliott Wave principle, so the strategy I'm trying to follow most of the time, which you can read online for free if you're using the link in the description down below, or like I did, get a physical copy. Now with that out of the way, let's jump into it. So we still have the same positions as pretty much for most of the week. So we have our shares in GameStop. We have the $30 call options that we sold against those shares. So if today GameStop finishes above 30, those 500 shares get called away. If we stay below 30, then I keep the shares, and either way I pocket the almost $250 premium for this week. Now I understand $250 is not a fortune, but in relation to the portfolio size and considering the duration of 7 days or partially only 5 days since we sold that option, it's actually quite a decent return. Outside of that, we still hold our shares in Cost, SPR, GWAF, NEO, BNet, and IMMR, so Immersion. Yeah, and obviously a long-term call, so-called LEAPS, for Grab that expires in January 26. So yeah, let's take a look at the chart. I think the first thing we want to take a look at today is actually NVIDIA. During our episode 9 days ago on the 3rd, if I'm not mistaken, so before the move up here happened, we actually expected, so we can, for that we have to move one thing and we can remove this one here. So we actually expected that potentially this might be a 5-wave move down, and we're currently getting our A, B, and wave C. We expect it to go up to around 133.78 and then there finish basically our wave C and have our turnaround. Now we went up a little bit higher. We can see that we touched the 78.6 retracement level. So if we take this distance here, we retraced 78.6% up, and then yesterday bounced from here. Now I didn't trade that because I'm usually staying out of NVIDIA, so because the options are still very pricey, and this week anyway our capital is already committed in other positions. However, whoever watched, or if you've watched 8 days ago, you would have potentially been prepared to enter roughly here, or maybe you would have considered entering here and you would have made a killing yesterday. Now as far as NVIDIA goes now, I would assume that we have our first wave down finished here, which means we right now would expect, and let's move that a little bit back because it's not as relevant anymore. We right now would expect that we potentially get an ABC pattern upwards, so a small recovery into any of our usual price areas, so between 129.72 and 132.62. Those would be the most common or most probable areas. And then from there, continue our journey down with an, in quotes, even bigger drop. As for how far this whole thing should go, if my labeling is right, we can just adjust this labeling here. So that would be the starting point, that would be wave A, that would be point B, and then for point C, we get the target areas at 120, although that's not yet below here. So the most likely target area would be 110 or lower. We'll see how that plays out, but again, for the short-term future, I would expect that we recover a little bit here, as said, and then from here, then make our 1, 2, 3, 4, 1, 2, 3, 4, 5, and 5 might be 110, but could also be lower. Now, if that is indeed wave 1 downwards, then although it looks then like a relatively big wave 1, but still, but we would expect. Come on. For NVIDIA to actually, yeah, so in our wave 3, go at least into the area here, then wave 4 and wave 5 finishes somewhere here. Or it's possible if we have a strong third wave that we get into the area below 110 already here, have a wave 4, and then for wave 5, we actually would consider 95 roughly as a target area. Yeah, so for next week, if we have available capital, it might be, yeah, it might make sense to get put option. Maybe I'll look today before market close when I'm able to roll my positions. If not, some of the premium that I get should be used to maybe get a put option that expires next Friday or the Friday after that, below 120, for example. Yeah. So I'll have to look at the prices now. So much about NVIDIA. As said, so right now, I mean, another option would obviously be that this is in some form 1, 2, 3, 4, and we get wave 5. Then my pattern is wrong, happens. But from the looks of it, I would right now actually expect that we have 1, now wave 2 as said. So let's bring the retracement back here to get an idea. Yeah, if you don't deal with options or so, right now, if you were to short NVIDIA, again, I would only enter in those price levels here. So 129.72 to 132.62. And the stop loss would need to be at 137.32 and take profit anywhere below, what did we have here? Anywhere below 115. So the risk reward ratio actually relatively good for those trades. Just remains to be seen which of those levels we hit, if at all. So if the 5 waves here are finished, then we should hit one of those at least, or all 3. If the 5 waves are not finished yet, then we might first drop, and we would then have to adjust that to get new entry levels. Yeah. So yeah, that's what I would do. But again, my capital is currently already committed. Now let's look into GameStop. There we're actually waiting pretty much the whole week for GameStop to potentially cross the 26.69. Yesterday we saw, that was yesterday, yeah, no, 2 days ago we saw that we got close to it. But overall we are kind of like on an upwards trajectory right now, which is kind of in general nice. So yeah, so something like this. And we'll have to see. So it looks like we will break out here. Question is, will we manage to beat the 26.69, so or break? Max pain today would be at 25 so far. So based on options, if we finish at 25, the majority of options will expire worthless. So no matter if it's call or put options, we are currently a little bit higher. It's possible, as mentioned earlier, so until we cross the 26.69, at least in my opinion, it's still possible that we get another move downwards. So we still wait. Yeah. Now the question would be, what do I do with my call options if I wrong shortcut there. So I got $47. $237 would be the maximum premium that I can earn if they all expire worthless. So if I close them early and say I realize 90%, then I would have to close each of them basically at, actually exactly the opposite. So minus 47.4, buy each of them back for around $5. If I do that, I realize 90% of the maximum profit that I could make here, and will be able to and sell new options for next week. That also brings us to how much we would get for next week. We can see right now, if we sell a call, we get $80, so we can realize $400 for next week. If the price moves up, those options become more expensive. So although it also means that our current options become less expensive, because as we move up today, there's still the likelihood that we finish above 30. And so the question is, what's the best play here? And I think the best play here for me is to wait. Of course, if we go down, then it means that I will get not $80, but maybe only, again, $50 for next week's options or so, which again would be $250 return, which is okay. And if we move up, I have the risk in quotes that we end up in the money and that the 500 shares get called away. However, in that case, we would finish above 30, and I would then be able to potentially, as we can see, at the money would be around $135 right now. So for actually more than what I would get right now for selling the new calls for next Friday, I would be able to sell put options to, again, like earn more premium. And on the other side, basically just say if we fall below 30, I'd be willing to buy the shares again. Yeah. Yeah. One thing we started doing during this week is, and I just need a second to open the report. I shared with you guys why I bought, for example, SPWR, so SunPower, and Greenwave. I think it was Greenwave. Yeah, Greenwave Technologies. And so we talked about that, so that it's also about earning through the stock yield enhancement program it's called. So basically borrowing or lending out my shares to people that actually bet against the market, which obviously, yeah, like, I mean, we can argue about it, but again, like for the positions that I have in Interactive Broker, I'm fine with that. And we can see, interestingly enough, so SPWR now got borrowed. Yesterday it wasn't, from what I recall. COS still is borrowed. COS had yesterday, I think, 15% interest. Today it's 18%. So it seems like more borrowing is happening, which is good. GWAF is still above 50% net fee rate. So again, although not all our shares are lent out, but most of them are. We can see basically I got 90 shares back, but now 188 got borrowed. So it seems like more shorting is happening. Of course, I have a very, very small portfolio here, so it's not a benchmark for the whole market, but still in COS, we see that just the 100 shares that I have were given back and were borrowed again. So, and in SPWR, it basically the first time that I got borrowed and almost the full 200 shares. And we can also see, so SunPower has a low net fee rate, which means there are either not a lot of people shorting it, or there is a lot of there are a lot of shares available, which makes it then cheap to short it. And whereas Greenwave really gets hammered apparently because we can see the net fee rate at 55%. GameStop, interestingly enough, despite having 500 shares, is not being borrowed at all from my portfolio. Yeah, do with that what you will. And anyway, so for GameStop, we'll have to wait. Again, crucial mark, in my opinion, the 2669. Considering the current small scale pattern we have here, it's possible that we will break it. It's also possible that this is some kind of 1, 2, 3, 4, and now wave 5, and then somewhere here we bounce and then go down, and that we actually finish close to max pain today. Would be probably in my favor. I mean, for the current options, yes. For the ones for next week, not as much, so would get a little less for them, but we'll see. Now, yeah, BNet, we're still waiting. I don't think we have a valid pattern right now. We actually, yeah, the chart here is a little broken with that outlier here from the split event. If we ignore that, it's hard to see, like, we went through all the usual retracement levels that would serve as turnaround points. So I wouldn't be surprised if we go lower here, but we also don't hold a huge position, so we can hold it long term and see how it turns out. Then next one would be GWAF, so Greenwave, which is still has yet to find its bottom, but considering the 50% or 55% net fee rate that we earn on Greenwave technology, I think it's mostly not the natural price development, or yeah, like however you want to call it, but that it's because of heavily shorting that's happening here. We'll see how it continues. Yeah, I think the company has a bright future in quotes because they're active in an area that, in my opinion, has potential. Costs, I thought the correction would already be finished, so that was on me. We could theoretically go a little lower, but so the 650 mark would be the maximum target for an ABC, in my opinion, and that is if that is indeed the correction. Could be that this is some form 1, 2, 3, 4 and a shorter fifth wave. Then we would correct the whole pattern, and we could actually also go lower. So right now we'll have to also just wait and see, but I'll happily hold those shares as well. We entered at exactly $10, so we could have entered a little bit better at 967 or 68, but that doesn't make a huge difference. And what else do we have? SPWR. Yeah, so SunPower. The other question is, did we finish the corrective pattern ABC here, or did we not? If we finished it, then upwards potential is there. If we didn't, we can actually check the profit targets if that is indeed ABC. So yeah, pretty much only this one is valid, because if we go below this point here, then we don't have a pattern here anymore. IHA 577, welcome. How are you doing? Yeah, so I think the crucial point here will be to basically hold the breakout. That if you imagine a line down here, if we actually put one here, up, yeah, so like roughly like this. So if we hold the breakout here, then I think we'll have our pattern upwards moving forward. And if we break below again, then yeah, we'll just have to wait and see. Now, last but not least for today, I actually want to check out SPY. Yeah, yesterday we had a drop here, and now similar to NVIDIA. Get rid of that. And let's get... Yeah, similar to NVIDIA, I think that we might have wave A finish down here. We now get some kind of ABC pattern that gets us anywhere in the area 558 to 560. And then we potentially could get another push down, which means anywhere in that area would, in my opinion, be an okay entry. Yeah, I'm using Elliott Wave Theory, yeah. And would, in my opinion, be a good entry to either buy put options or short it with the stop loss then up at 563.52. Yeah, so although remains to be seen. I said my capital is currently anyway 100% committed, so we'll just have to yeah, like I just have to, in quotes, sit this one out, unless my call options end up in the money and therefore my shares get called away, which would free up the capital that I currently have in those shares. But other than that, I unfortunately will have to sit out those positions, yeah, or potential trades. Yeah, what else do we have for today? I think we're pretty much through already. Yeah, I think we're really pretty much through. So there we're still waiting for at least the break of the 2669. And then depending on that, today in the evening, I'll have to adjust my options. Yeah. So, and if you're wondering, so today before market close, I will, unless they're in the money, if they're in the money, I'll let them expire in the money, so the shares get called away and the capital is freed up. Otherwise, I will roll them already like 10 minutes before market close to the $30 call options that expire next Friday to pocket another couple $100 in options premium, and therefore further reduce my cost basis, in quotes, and grow the portfolio that way. Yeah. Can you check gold COMEX on? Do you have a ticker? We find it. You tell me the ticker it has on IBK. There we have GC. Okay. Do I get any data? Unable to change. Unable to change. How great is that? Unable to change. Yeah, there's no data here. So yeah, I don't get any data. So that makes it a little tricky without the... Check 1 second. One second. What subscription would I need to have that data feed? COMEX real-time quote bundles actually should. Yeah, sorry, I don't need that data feed, and I'm not gonna subscribe to the $11 bundle just to make an analysis of something I personally don't look at. Best I can do. Wait 1 second. Let's check on TradingView. Futures. Oh god, the interface. Where's the chart? Yeah, big chart. Okay. No, no need to connect that. And monthly and okay, logarithmic. Yearly. Okay. January 16. And yeah, so almost. So I mean, based on the yearly chart, we had a correction here, which means we should have the start of a new 5-wave pattern here from roughly early 2016. If we look on early 2016, so here we potentially have something like 1, 2, 3, 4, and now we are in wave 5. And the target area for wave 5 would be, the minimum target would be 2,191 to 2,543. And so since we had that correction, wait, was this point higher? This point is at 2,078.80, 2,089. No, that was higher. So here we have an ABC, and then here we have basically, that's wave, should be wave 5 here that starts here. So if we go a little bit closer, we probably have, yeah, I mean here 1, 2, 3, 4, 5, wave 2. We can also just quickly. God, yeah, it's exactly the opposite from my charting software. So always from the bottom up, yeah. I mean, here we retraced nicely 50% and another ABC. So we have basically 1, 2, and then in there we have, then we're now in wave 3. So we will go, it should go higher than the mark that I mentioned earlier, that what did it say here? 2,500. So it should go higher. So potentially I think that we might see 2,841 for this third wave, and then we get a wave 4, and then we get a wave 5 for another push higher. And because here, even on the weekly chart, it looks like 1, 2, 3, 4, 5. So again, like here we have 1, 2, 3, 4, 5 for wave 1, ABC, wave 2. Now we're in the third wave. The third wave, I said, should go up. What did I say? 2,800, and I think 2,800. Yeah, 2,840. And now in this third wave, yeah, there's so in this third wave, we likely have 1, 2, and are now in the third wave of the third wave, or maybe finished it here, 3, 4, and now we get the wave 5 here, potentially. Yeah. So or this wave 3 is not finished yet. If that is already finished, then we could use that 0.2, 0.3, 0.4 might be here, but might also be here. Yeah. So it doesn't make a huge difference. But then basically for wave 5, we get a target at 2,584 to 2,750 or 60 for a fifth wave. And then again, that would then be 1, 2, 3. And then we get wave 4 and then wave 5 for the final push. So I think there's still room to grow. Yeah, I think there's still room to grow here. We could also, I mean, we can also use Kennedy channeling technique, for example. Channels, give me a channel. Where's the channel? Channel, parallel channel, yeah. And zoom out again. So then we would say, okay, this is wave 1, 2. We have the breakout, which indicates wave 3, which then means, okay, if we take that, and that, we have our confirmed wave 4 basically here. Then we need a trend line. The moment we have the breakout from this line, or technically even this line is sufficient, we are confirmed in our wave 5. And now last but not least, we can, again, channels. Where was the channel? Also in the lines, of course, yeah. So blah, blah, blah. And now we can take 0.3, Now we can take 0.2, 0.4, 0.3, and I'm going to delete a few of the other things right now. So that would be our so-called destination channel. So we would assume that wave 5 finishes in either near the top or at least in the middle here. Yeah. So based on this, 1, 2, 3, 4. I have the wrong channel left. Sorry, my mistake. So get rid of that one and put in the right channel. So 0.2, 0.4, and 0.3. Yeah. So that would be our target areas. Yeah. So close to the top, we already reached the middle. That would be the minimum target. But based on the monthly chart, we would then expect basically that we still go higher. We see that based on this, we bounce here to 1618. So that's likely 1, 2, 3, 4, and now we get wave 5. So and then based on let's get rid of this. So too much color. Based on that expansion here, I'd say 2,543. It's not super close to the overall target here, but based on that, that would be where I would then say, okay, it might turn around. And if we zoom in a little bit further, so we can repeat the same thing here. And as said, we could then use, that's our base channel. And we're still in wave 3 up because we don't have the real breakout yet from that base channel. And then in here, let's check the smaller ones. So here it's going to be harder. Yeah. Here it's going to be harder. So if we do this, yeah, we barely have a breakout because that's already such a steep angle. So there we don't get any more information here. But yeah, I think based on the monthly chart, that there's still room to grow. That we basically, that would be our 3, 4, and then 5. That we're currently in wave 5, and that wave 5 still should go up to at least 2,543, but potentially even higher to touch the top of that channel. In which case, as said, I think here we have the 1, 2, currently wave 3, not finished yet. And then we get a wave 4, and then we get a push to wave 5, and then hit that channel. Probably close to the 3,000 mark then in that case already, or not. So if we look here, where's 3,000? 3,000 is around here. Yeah, so close to the 3,000 mark. And then from there, we get a correction. Yeah. So yeah, that would be my best guess based on a quick labeling starting on the yearly chart. Yeah. So basically from the recent low. Yeah. Overall it would be harder, but yeah, what else can we do? We can consider we consider 5-wave start here, and if we trust the Ames indicator, then that would be wave 1, wave 2, and now we are 1, 2, 3, 4. Yeah, exactly like I labeled it, and we'll then get wave 5 to make wave 3 the strongest movement. Then we get 1, 2, 3, 4. 4 will again bring some red elements here, and then we get our wave 5 for the final push. So I think gold futures are going to go up. And what's that like then? Basically, there's still up to 20% growth, in my opinion. I might be wrong. So as always, it's my opinion, do what you will with that information. But yeah, so unfortunately, I said I don't have the data feed in Motive Wave. So yeah, I'm not trading commodities. So that's the best I can do here. And I hope it helps you. Gonna save that. And anyway, so GameStop seems to drop now a little bit. If we circle back, yeah, just a little bit. So I noticed that my call options got a little bit more into profit. Yeah, anyway, I think we're gonna call it a day here for today, or actually call it a week. If there would be some substantial movement in GameStop or any other of the positions that I have, I might just come online spontaneously. But I have some calls scheduled throughout the rest of the day, so probably will not be able to come online. Yeah, so like, I mean, it would really need to be some earth-shattering movements in the markets that I can drop the other things. Yeah, you're most welcome. I recommend, if you, depending on how familiar you are with Elliott Wave Theory, there should be two things. One, I'll actually have to double check that, 1 second. There should be, and I'm gonna switch my camera for a second. Do I have it linked down? Yes, if you check the description down below, you can find the Elliott Wave cheat sheet. So it's one page that has all the wave patterns and their rules and relationship and how they subdivide and so on. It's quite, once you understand the basics of Elliott Wave principle, that thing is quite useful in my opinion. And that was the first one. And the second thing is, like, I recommend if you Google Kennedy channeling technique, it's really, really cool. It's pretty much what I just did on TradingView. It's not always 100% accurate, but with it, so basically by just using the trend channels, very often you will be able to label the 5 impulse waves properly and know when a 4th wave is finished. Yeah, it doesn't tell you when a 2nd wave is finished, but once you have wave 1 and 2, so you look for a recent drop. If we again quickly switch back, so if you look for, on a bigger time frame, you look for a correction, which means you have a starting point of a potential new impulse pattern. And then from that moment forward, you can then use the Kennedy channeling technique. So you first have your so-called base channel where you take point 0, so the starting point, point 2, and parallel through point 1. That's your base channel. And then when you have a breakout from there, you are most likely in wave 3. And what you then do is you take the point 1, and whatever high point you have, so if you would still be in February 20, you would have that high point, so you take that, and with a parallel through point 2. And what you're waiting for is basically a breakout to the bottom to have a confirmed wave 4. So that doesn't happen in February, so you move further in April, doesn't happen, and so on. And then you move here, that's your high point. And then basically the moment you have a breakout, so not just briefly below, but staying below, so like here, you have your confirmation, okay, we're definitely in wave 4. And when you're in wave 4, you can use a trend line. So the first one is called the base channel. That's the acceleration channel. Then you could use a channel here as well, but a trend line is actually all that's needed for a deceleration trend line or channel, where you basically take, yeah, we already have it on the chart, so 1 second, where you basically take 0.3 and then, yeah, technically that high point here, but since it's really just one spike up, you can also use that. So it's your deceleration trend line in quotes. And once you have a breakout confirmed here to the top, so we go out, we retest it, and we go out again, you can assume that you're in the 5th wave. And then you have your destination channel, which is the last one, which is then just 0.4, 0.2, and 0.3. And I'm going to change the color of this one real quick. And for the destination channel, wave 5 should touch usually at least the median or get close or touch the top of that channel. Yeah. And then obviously, if you zoom in, you can apply the same channeling technique to that wave pattern here then. Yeah. Additionally, what's also cool about it, in my opinion, is, let's change that back, is that very often the 4th wave will touch the bottom at the top or the median of your base channel. So you get potential entry points. So once you know that you're in the 4th wave, which in this case you only know here, you can consider making your entries here on the channel line and then here on the median or in the middle as well. It doesn't always happen, but it happens often enough that it's relatively reliable. I mean, you could also then zoom in and try to sub-label this so that this turns out as A, B, C and get better and more accurate targets. Yeah. But for a rough estimate of where, how far should it drop and where might it potentially turn around, the Kennedy channeling technique is already great. And as I said, it gives you also targets roughly for a wave 5 area. And then you can use other strategies and tools and like things you learned to basically try to predict the areas a little bit more accurately. One thing that I, for example, figured out, which is also quite interesting here, is that very often, again, like, I mean, we're not talking certainties, we're talking about like probabilities, but very often, 1 second, wave 3 will turn around. I have the wrong one. I wanted the 3, 1 second. I actually entered the, yeah, not 32, but I wanted this one. Wave 3 will hit very often the 3.382 or 3618 extension levels. Now here we fall a little bit short, yeah, but very often that will be the level where the third wave, oh, sorry, no, like not the third one, the 2618, that's the level, sorry. Like basically, in many cases, when you have a wave 1 and you put a extension there, you will see that the third wave will turn around after it hits or briefly goes through the 238 or 2618 extension levels, and then you're in wave 4. So additionally, I mean, here we went a little higher. We see that we went a little higher, but pretty much we still turned around in that area. So while Kennedy channeling technique tells us that is our wave 4, based on that 1, 2 or wave 1 here, we assume that we have an additional indicator that that actually is the end of the third wave. So that's our wave 4, and now we are in wave 5. Yeah. So yeah, like so. Same thing goes with if you take an expansion for wave 3, so starting point of wave 3, so wave 2, wave 3, wave 4, then the 0.618 level and the 100% level will be the target areas for wave 5. Again, not always. Sometimes you will only touch the bottom area, or not even at all. Yeah. Sometimes you will shoot through the 100% area, but those are then the usual profit targets that you, or the kind of like common profit targets that often happen. Yeah. Like so. At least that's what I learned over the years so far. I'm also far away from always being right, but yeah. No. In this case, it's like very often, like, in a 5-wave impulse, 2 waves tend to be equal. So either wave 5 is equal to wave 3 or to wave 1. Yeah. In this case, we're assuming that wave, when we use an expansion, so we take the distance from 0.2 to 0.3 and then start it again from 0.4. So then you basically project the distance from wave 3 as your wave 5, and then you have a minimum target so that the 5th wave will be at least 61.8% as long as the 3rd wave, or it will be identical. Yeah. So again, it doesn't always happen, but it's, I don't know, often enough. I mean, then anyway, the smart move is then to zoom in and try to label your 5th wave. Again, maybe with Kennedy channeling technique, maybe with other methods, yeah, to get more accurate estimates. Like personally, I do it like this, that I try to, okay, I get my pattern on the big scale, and my big scale tells me whatever the profit target would be. Now that we already went through here, it would be 2,543. Yeah. So if I have that profit target now, and I zoom in closer, then I can try to label this part here where we assume that this is 1, 2, and we're currently in the 3rd wave. So, and if I label this part here, especially if we would already have a finished 3rd wave, yeah, right now I think the 3rd wave is not finished yet, then we can apply the same thing and we get another narrower profit target. And then we can see where those profit targets overlap to get like the, in quotes, like most likely. Yeah, it's not always going to happen. Sometimes you get it wrong. Sometimes you mislabel. Sometimes it's just going to be a different pattern than you thought it is. But yeah, like always work your way from the top. I mean, that's the general basic thing. Find the recent bottom. So a starting point from where to assume there's a new impulse wave that started, and then work your way through the time frames. And basically, once you know, okay, this is 1, 2, 3, 4, and we're in the 5th wave, you can focus on trying to find or trying to look if that 5th wave already has 5 waves itself or not by zooming further in. And then you can make your way further and further. If you look on the hourly chart, it's not going to get a little bit cluttered, I guess. But here on the hourly chart, we probably have a 5-wave impulse. 1, 2, 3, 4, 5. Yeah, with where the Kennedy channeling technique would actually not be that useful, because our 1, 2 would look like this. And we have the breakout here to confirm that we're in the third wave. Then if we take 0.1, 0.3, 0.2, then we see we break out here, showing that we're in the fourth wave. The fourth wave in this case touches the bottom of the base channel. And now we are in the fifth wave. So we take 0.4. Let's start, or we take 0.2. We take 0.4. I missed it, but I can adjust it then. So like this, 0.4 and parallel through 0.3. And we see we hit our target area at the top of that channel perfectly. So very likely we finished 1, 2, 3, 4, 5 here, and should now expect a correction of at least that wave. Yeah. Wave 5 can extend up to 161.8 of wave 4. I don't know that by heart right now, to be honest. Yeah. But the thing is, like with a lot of those wave relationships, there are some that in my experience happen more often and some that are then the outliers. And I'm just usually using the ones that in my experience happened more often as my entry points or profit targets. Means here and there I'm wrong, but so far it served me well enough. Yeah. So yeah, but circling back to gold, even using Kennedy channeling technique, since you originally asked for the 1 hour time frame, it looks like we, as said, finished our 1, 2, 3, 4, 5 here, and might get the correction here. So based on Kennedy channeling technique, if we use an expansion, so we go from 0.2 to 0.3 to 0.4. We also see that we perfectly hit the 100% expansion. So wave 5 and wave 3 are identical in that case. Also pointing towards that is the end of that 5 waves, and we should now get a correction. If we would want to know how much of a correction we get here, we can now just take a retracement for the entire 5 waves, and we would expect in most cases to at least hit the 38.2 retracement. So in this case, that's the 618 marking on this graphic or illustration. So that we right now would expect that we will get an A, B, C that takes us down to at least 2,382. So since, however, the overall outlook is that the pattern is still not finished, we still have our 5th wave to finish. So based on the weekly and monthly charts that we labeled, one could say, okay, right now, I don't know, pending buy order at 2,382.40. Now the pattern down here, it could obviously correct more. So from what I recall, if it's a 2nd wave down here, then that level would be the most likely. If it's a 4th wave, it would be the 38 or the 61.8 retracement. So here the labels are just opposite, yeah, because of how I drew the retracement. Yeah, so basically potential entry here, and if we go through here, then yeah, like entry at the 50% mark, entry at the 38.2, stop loss at the 0 mark for long positions. And you could also obviously keep an eye on the lower pattern. So, but for that you would then have to look even closer and try to label this, where likely we have 1, 2, 3, 4, 5, and then we get A, B, C. So for a big A, B, and then we get wave C. So you could keep an eye on it and try to label the entry point better. No, I don't use it. Yeah. So, so you could keep an eye on it and try to label the entry point better, or you could just have your entry right here and just wait for it to happen. Although, I mean, I'm very bad at estimating the time frames that each wave takes. Yeah. So it might be that you have capital locked up then for some time. If there would be options to trade, I would sell a put option at roughly that price level. So basically, so that I earn the premium, and if we finish below that line, I get my shares, and it's okay. And if we don't fall that far, I still earn the premium. Yeah. And one other option, however, is, yeah, so while Kennedy channeling technique suggests, and also the 3-4 expansion suggests that we're finished here, but we also would need to confirm that we actually have 5 waves here, because there's also the option that this is somehow 1, 2, and then 3 here, or 3 not even finished, because here we could also have 1, 2, 3, 4, 5, or 1, 2, 3, 4, 5, so that we actually finish above the destination channel. So based on what we labeled so far, I would have said make long entries at 2,382.40 down to 2,352.70. And however, you should maybe take some time and try to label this part to try to confirm, is this really already the 5th wave finished? Although, I mean, we have 2 things that tell us it's likely the case, but from the look of this part here, if we, I mean, there we can actually, let's go on the 15-minute chart, yeah, so, because if we here say wave 1 and, I don't know, wave 2 till here, then we have our breakout from the base channel, so which means that would be our, I'll come here, 3rd wave. Now we're in wave 4, and when we break out here, we're in wave 4. In this case, we go below the base channel, yeah, like happens rarely, especially in such steep conditions. Now, if we add our trend line roughly like this, so it would point towards there is still a wave to come if we look that close, yeah. Start of current week. When did the current week start? Yeah, so what do we have? Like this, we have the 12th, so on the 8th, yeah, 8th was, yeah. Yeah, so basically got caught in the drop on the 8th or so, yeah, so that one is tricky, but even with the naked eye, we have basically 5 waves here, A, B, C, and then we have a strong wave C down. Yeah, but then the wave would actually end here, yeah. So it's like a little bit hard to determine that part here. So how the ABC finishes here, or it has to be AB with a super short wave C. So, or it's a combination of a correction. So it could be that this is ABC, and then this is another wave X, or wave X till here, and then we have another corrective pattern down in that small area. So corrections are the pain, like corrections are the hard part to label. But if we look from here, then we can see that while the bigger charts suggest we already finished, the smaller charts suggest that we have here 1, 2, and then here potentially wave 3 with 1, 2, 3, 4, 5. And we are here in wave 4 and should now get a breakout from here. And when we have that breakout from here, we get our target area for wave 5 slightly above whatever there is, 2,430 or so, yeah. So, but that's also the issue with Elliott Wave Theory in quotes. There is always a lot of flexibility in it, because at any given moment you are probably able to label 2 or 3 different variants that all fit the rules, and you have to make the choice which one is most likely. So I said, based on the bigger time frame, we already clarified where I personally would enter. Based on the hourly time frame, it looks like there is still a wave up to come, although, I mean, we're talking about what, a 1% move, so from 2,400 to 2,430 to finish those 5 waves. And then we have the drop into the, or should have the drop into the areas that we declared earlier for potential entries. We should at least, so if we finish 1, 2, 3, 4, 5 here, we should at least drop down into that area again. Yeah, so into the area. Very often when you have a wave 2 or a corrective wave, very often will end in the area of wave 4 of the previous impulse wave of a lower degree. So in other words, if this would be 1, 2, then that second wave usually finishes in the area of wave 4 of the 1, 2, 3, 4, 5 of the, that's previous, yeah. So, but again, I think here, the small scale, the hourly chart suggests we still will have a push up a little bit, like 1%. Yeah, maybe a little more, but that's what roughly my estimate would be here. And then from there, we would have finished actually the pattern here, and then get our correction. And that would be actually that 5th wave here. Then we get our correction for that, and then we still have another wave. So, but as said, the entry points are shared earlier, yeah. Yeah, anyway, I gotta go now, so I have a couple of calls scheduled and whatnot. So if markets start to move drastically, I'm gonna actually save that, although I probably will forget what I labeled there. I might come back online later. Yeah, as mentioned, I can also recommend, by the way, so circling back real quick, but I can really recommend Motive Wave, because there is, so like for Elliott Wave Theory, obviously you need to set up your data feeds, and I, for example, use Interactive Broker as data feeds, but only have the subscriptions for the stuff that I'm using, yeah. But in Elliott Wave Theory, you have auto labeling, so I actually have a layout for that. So you can have it auto labeled, and basically all you have to do, I mean, GameStop is probably a bad example, but let's switch back here, but let's go to the NASDAQ, for example, up and switch on monthly. Monthly is probably too much, yeah, even monthly, yeah. So can enable auto labeling, and now I see, for example, we had a drop here, which means my starting point should be around October 22. So I just configure the starting date 22, let's say September. So it only tries to label forward from here. On monthly, it does now nothing. That's great. Did I pick the right year? Yeah, 22 September. Yes, yes, yes. Okay. And if we zoom in further, weekly, we already get a labeling. Yeah, it might not always be right, but yeah, I mean, it's like I don't always agree with the labeling. Like, for example, I don't agree that this is wave 1, but it looks more like 1, 2, 3. Or it's not even wave 3, because there it could also be 1, 2, 3, 4, 5. So I think it's more 1, 2, 3, 4, and now we're in wave 5. Yeah, and it also, like, so it's not always. It gives you a good idea what something could be, but I think also if we look here, that one's tricky. As I mentioned earlier, very often wave 3 will terminate or turn around at around the 2618 extension. But the next level, if it breaks through this one, would actually be the 3618. And in this case, we pretty much bounce from both. But from the looks of it, because we also need 5 waves here, yeah, I would think that the auto labeling here is wrong, and that basically our wave 1 is not even finished, so that this is 1, 2, 3, 4, and now we have wave 5. Yeah, but it's quite cool. It gives you kind of like a quick labeling that you can then analyze yourself. How well does it look? It also comes with a scanner, so you can set up your watch list, and you can, for example, and just say, so on this and that time frames, on the 1 minute, 5 minute, 15 minute time frames, look for wave 2. Yeah, and then you can just say start the scan, and then it takes some time. Yeah, so it's then doing something, I guess, or I did not press start. I don't know. It's been a while since I used the scanner. I usually label myself. Yeah. Scan complete. Okay, so it says 0 results. Cool. I don't have any instruments configured. Okay, so can I add my? Yeah, let's add NVIDIA. No, NVDA. Yeah. There we go. Apply. Okay. Start. So basically, you just let it run, and then it will tell you which pattern it found. So if it found a wave 2, and it will also rank it, how likely it is to be true. And then you can click on it, and it opens down below, and you can open it as a big chart, blah, blah, blah. And then you can decide for yourself, is it true or not, or do you agree or do you not agree? Plus for Elliott Wave itself, so other than the automatic labeling, so in NVIDIA, it doesn't find a second wave right now, so one that's currently happening. But other than the auto labeling that we can get rid of real quick, their template. So other than the auto labeling, you can also, for example, just say, okay, I want to label an impulse wave, and you either manually label it or you just drag it over an area and it will label it for you. Although I would think that's more likely than like this. Not sure if wave 4 is finished. And it has then a ton of things like ratio analysis. So wave 1 versus wave 3, for example. So you see how they behave to each other. So it's the best software that I personally found for Elliott Wave Theory. Yeah. Although I have to say it also is pricey. It comes at like the Elliott Wave packages or so started, I think, $100 per month. Or you can, like I did, basically buy the software and then just once a year or every 18 months or so pay a little bit for getting another update subscription so that you get the latest version of the software. Yeah. But overall, kind of cool. It integrates with Interactive Broker, which is in my case cool because it means I could theoretically, if I wanted to, also trade directly from here. So I could say, okay, whatever, like trade, limit order, trailing order, whatever. So yeah. Yeah, I mean, in general, you can also, one last thing, yeah, if we circle back real quick to NVIDIA, so that's actually one of the cool things. Yeah, so NVIDIA, and we labeled this part right now, so auto label it more or less, yeah, so set impulse, yeah, and again, I think that might not be accurate. I mean, I actually think this might be A, B, C, but since we start from here and say we told it to look for an impulse, it's looking for an impulse, but you can then also just right click and say decompose one level, and it will try to sub-label it for you, yeah, or you can say 2 levels and so on, and it also, for example, if I say this is wave 4, so that this would be 3, then you see it tells you, hey, that's wrong, because in an impulse, wave 4 cannot enter the territory of wave 1, yeah. However, if you then take, where do we have it? Leading diagonal, yeah, that allows, or not only allows that, but requires that your wave 4 enters the territory of wave 1. Yeah, then you see no warning, but if it wouldn't enter the territory, it again tells you, hey, that's not possible in the leading diagonal. Yeah. So yeah, in my opinion, the best tool out there for labeling Elliott wave in general, the automatic labeling is only so accurate, yeah, but it gives you an idea, and you have pretty much all your tools at your disposal. So if we look for a leading diagonal, yeah, then it currently would say like this. Obviously, doesn't make much sense with that spike here. So you see the auto labeling isn't perfect, but it's overall still useful, yeah. And yeah, like offers pretty much everything else as well. So corrections, triangles, combinations, blah, blah, blah. And yeah, so anyway, I said I have to go. Thank you for tuning in. I hope you took something away. Again, the one thing I really can recommend, like in the description, the one-page cheat sheet, it really helped me a lot to quickly see how should a wave subdivide. What are the rules in terms of wave, whatever, wave A should be at least that much of wave, wave B should be at least that much of wave A, for example. Yeah, it's like the best A4 page for me. By now, I know a lot of it by heart, but it's still useful to look at it again, yeah. Anyway, but I said, I'm gonna go now, so thanks for stopping by. Have a great rest of the day, great weekend, and a lot of success with your personal trading. And then maybe see you next week in another episode of Daily Market Mastery. So till then, bye-bye.